Hello and welcome to Crypto Weeklies. Now that Bitcoin is below the 200-week simple moving average, we'll do a deeper analysis of what it means for Bitcoin and MicroStrategy. In this video, none of the content financial advice. Right now, price of Bitcoin is slightly under 60K. The 200-week simple moving average is at around 62,600. For now, MicroStrategy and MSTR, previously known as MicroStrategy, now known as Strategy Inc., is again at that 85% correction from its previous all-time high. Now looking at the 300-week simple moving average for MicroStrategy at the previous bottom over here, the drop from the 300-week simple moving average was at around 48, 49, almost 50% over here. So accounting for some diminishing volatility from cycle to cycle, the base hypothesis on this channel was for this bear market, at least 30%, if not more, drop from that eventual 300-week simple moving average. Now this has almost gone to 32% lower than the 300 moving average. From here on, again, it's not, I'm not saying that the bottom is in, but it's not that sound to, again, not financial level, that sound to be bearish with respect to MSTR. Now the loudest bullish proponents of MSTR have turned bearish. So that's typically one of the again, not mandatory, but an essential scenario to pan out for the loudest bulls for any particular assets in the bear market, to be vocal critics over here. So you can see in terms of the social sentiment and narratives on my website cryptoweeklies.com, largely the bearish narratives have come and taken full hold of the market. The size of the bullish narrative is small. Bitcoin and ETH almost garnering enough or similar attention over here. If you go to the full report view and analyze what it means with respect to the current attention in the market, I know for June there had been a slightly higher interest than May in terms of the monthly views, but in the larger scheme of things, it's still going and trending down with time. That means the overall social sentiment risk has gone down. We go back to the terminal over here. You find that the narratives as well as the risk levels for these assets with respect to whether they are in accumulation zone or distribution zone. Most of the major cryptos, the default in our default weights of all across all our models is in this accumulation territory. If you increase the size of the regression models weight, so the, what you can say, the longer term trend based valuation model as well as the time weighted average price model, you can see that if we add some more weight to these longer term predictor trend based models, the actual risks go down from that 28.28 to now almost 0.23 for Bitcoin and for other major cryptos. Coming to the default view with respect to the time weighted average price gravity, still, although the 90-day return for most of these assets is negative, barring a few exceptions over here, Bitcoin, largely in terms of the phase detection model, is in this bear market accumulation phase with respect to this polynomial regression based bands. This bear market accumulation phase is again coming to again at the lower end of this bear market accumulation range. The range is at around 59,200. Anything below that is in this deeper capitulation if the price falls below 59,277. I know this is currently at a lower price than that, but we take into consideration the weekly average price. So at this point, with the data at hand, again this is it is updated as of today, you can see that Bitcoin, in terms of the max euphoria target as well, has stretched out into that almost deep capitulation zone. These are necessary criteria for bear markets. Coming to equities and ETFs, so MSTR over here, If we take into consideration its own regression based identification of what the risk levels are, since MSTR started being a Bitcoin centric company, or Bitcoin related strategy company, the regression based fair value for MSTR has kept growing up as they piled up Bitcoin on their balance sheet. They did survive the last bear market of 2022. This is their second bear market in 2026. If they survive this bear market as well, I know from cycle to cycle there is some diminishing volatility. So accounting for that, for this bear market, the bottom green line or anything below the bottom green line is typically a great accumulation zone. That is typically any price action at or near $200. Now the regression based risk has eventually, again, not financial advice, has entered this accumulation territory, which is at this blue zone over here. The last two iterations over here in the May 2022 panic drop, and now in 2026, 4 years later, has started exhibiting a similar kind of risk-based move. The machine learning price forecast for MSTR is, again, if there is again a couple of weeks of bearish activity, the price might in the short term fall below the $80 level, but from here on, as most of the individual panic related scenarios have been materialized already occurred for this bear market. If we even go by the longer term view, so for example, this bear market, the drop has been from that euphoria of November 2024. The drop has been 85% in the last bear market. From that previous bull run peak, the drop was about 89 to 90%, slightly under 90%. So if this time around, let's take add another 2%, rather than again estimating that MSTR has to bottom exactly at the same time or exactly at the same drawdown as the last bear market, accounting for some diminishing volatility. Let's again start with that 86% to 87% drawdown from the lows, from the highs to the lows. That puts MSTR bottom at around $71, which is again from that machine learning standpoint, it would take 2 more bearish weeks to get to that level. If not, if the base case is going, if that case is going to stay intact for the next 10 weeks, the floor for MSTR is close to $82-83, which is the current price action for MSTR. With respect to the longer term indicators that we have, by the way, all of these charts are available on my website, cryptoweeklies.com. That's where you are seeing this analysis from. So this is again the indicator view. You can see at once what is happening in the market. The peak value oscillator view helps identify the phase of the market cycle with respect to what is happening to Bitcoin and ETH, with leading indicators such as the 200-day SMA and the drawdown from all-time high to identify the zone of where the asset class is heading right now. It's in accumulation territory. The fear and greed index is at 12. And the interpretation with this sentiment is again a 30-day sentiment of fear and greed. Once visited this panicking moment, like it does typically once in the bear market. If you go to the 100-day SMA, you can see that condition that it typically meets in the end of the bear markets or close to a bottom has already been made in April or May 2026. This also happened 4 years ago in July 2022. So this helps identify what sentiment is prevalent in the market right now. You can see how this can be calculated to identify the longer term trends at the bottom as well as at the peaks. The tree map over here helps identify what is the overall performance. So right now we are still closer to Bitcoin season, but not quite in the Bitcoin season. There are about 18 out of the top 50 alts beating Bitcoin. Bitcoin ROI is negative 12%. The overall sentiment, the crypto sentiment pulse is now has turned neutral. It was bearish for the last couple of weeks, and mostly discussions are revolving Bitcoin, not the general crypto market. Or altcoin related narrative has gone down immensely in terms of the activity footprint over the last 24 hours. You can see how these are calculated, which narrative individual narrative is, or article or video post is receiving bearish feedback or has bearish content under it, whereas the other ones, some of them are bullish, most of them are bearish. In terms of the value counts, 19 items are bearish, 6 are neutral, and 5 are bullish. So this is the news sentiment pulse analyzer. Bitcoin and ETH risk with respect to the base model, as mentioned in that bubble chart, as well as in this accumulation territory. Bottom detector with respect to Bitcoin and ETH are closer to 0.2, which is typically the accumulation territory. ETH is at a lower risk right now, composite risk, than Bitcoin. The ROI analysis for 2026, and just sorting this with respect to Bitcoin only at this point, and looking at the past bear markets, 2022 and 2018, we can see that we have entered this lull period in this second to third quarter, and now from here on, diminished volatility would be likely the play. With all of that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.